Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel L. Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel L. Chahine and Dennis Dick. Today, we're just going to call the show Earnings Show because that's what it is. We have a lot of earnings to get to, just to name a few. Google, JetBlue, Caterpillar, GM, McDonald's, Eli Lilly, Biogen, KMB, Domino's, obviously a whole lot more to talk about, so we're going to get through as many as we can. We're also going to be joined by Nic Chahine. He's our options expert. He's going to join us at 8:35 today. Joel, how are we doing in the S&Ps?
S&Ps are doing good, but Spencer, how you doing this morning? You're off a good mood.
Well, I'm tired, is the truth. I'm very tired, Joel.
Why?
Because
did you stay up late?
Not through no fault of my own. People were lighting fireworks last night at after midnight in my neighborhood. I called the police on them. I just want you to know that. I called the police, and you know what they told me? They told me that someone already let us know, and someone's on their way. And I called after 15 minutes. So I'm tired, so I'm in a good mood despite that. But back to the markets.
Oh, boy, yeah, that fireworks law here, you can just buy them anywhere, and people extending the 4th of July. But here we are on July 25th, the big earnings day. I don't even know. I guess we'll start with after hours last night.
No. We're going straight to Seagate.
Seagate?
What the hell just happened?
Oh,
it just fell 20%.
No.
STX just fell 20% right now at 8 o'clock, right when we started the show. It just traded 30.5. It's not 9 points.
Ah, jeez.
What did they say? Did they say they were blowing up the company?
Okay,
what did they say?
Okay, listen. Q4 adjusted EPS 65 cents. That may not compare to the estimate, which was 99 cents. It may compare, may not compare. Sales of 2.4 versus 2.57 billion dollars. So that EPS number looks bad because the estimate was all the way up at 99 cents and the actual was 65 cents. But that may not compare. But that's all I'm saying.
It sounds like it does compare because it's down. Well, it's bounced back. It's down 16% here now. This thing just fell out. It was $40 when we started the show at 8 o'clock, 8:04. It just came out with earnings. I just saw a print go at 30.5. I was like, what is going on? Western Digital, WDC absolutely crushed on this too. Sorry, Joel. Western Digital down. Well, it's bounced back too. It's down 4 points here now, but that's a shellacking for a stock with a 6.5% yield. That yield just went. I'm watching the yield update live on my platform. With 6.3 is now 7.6. You just got extra percent on your yield on Seagate. Wow. What's wrong with this stock compared to Western Digital? This is unbelievable.
I'll tell you, I'm getting very, very itchy on this.
He's scared on this one.
I am. Well, here's
the
power of my thinking. I was thinking it was breaking out over 95 today. Remember, we've been talking about that level. Look how many times it hit 95, 95, 77. And I'm like, man, this thing is perched and ready to go. And I'm glad I didn't pull the trigger. I mean, Seagate did not get a bounce that much off the last poor report. Let's just go right to the numbers and see. 30.47. That's your pre-market low. That is the low of the day's in.
30.5. Low of the day's in. 30.5. Who's selling 30.5? That's crazy. Now it's 34 a bit. 33.5. But
33.
It's still bouncing around a lot. I don't know. Just 32.91. This thing just bouncing around points. It's bouncing around points right now. People do not like. They must have said something with guidance too. No. It's got to be coming. That is a shellacking. For a stock that yields 6.5 is now 7.6. I was shocked when I started watching that thing go down. Wow.
Yeah, wow. Well, that's exactly last print at 33. You haven't even been near $30 here since you had a 30.09 print in August of 2016, August of last year. Maybe that was during the flash crash that you had. Oh, no, that was in 15. So, yeah. Whoa, man, oh, man. But you know what?
Out of your gains in 4 minutes.
That is a rough position. And if anybody's getting down and dirty in it, let us know. Man, oh man, mid-range on the pre-market session here is 35.60. So if you're looking for a target on the upside, but boy, there's gonna be some bloodshed in this stock. Anybody else? I know Western Digital trades in sympathy with this. Obviously, is there anybody else we should keep an eye on?
Well, you can see even Applied Materials was trading flat, and the number came out. Like, this is not a direct relation at all. The Western Digital is the one, the WDC, that everybody's going to trade. We'll give you some numbers on those. But, I mean, you got to think it's going to spill over. When you get one's down 16%, it could spill over even into Intel. I mean, Intel just started going red here, too, and it was up on the day, too. None of that is good news, you know. Western Digital's your play, though. If you're playing sympathy with this, it's WDC. And let's just go to the technicals on WDC, because it was trading up, and Joel still owns it. Man, he's had that for a long time. It's been trading up and just hanging out at $95 forever. Now we're breaking down. Obviously, Seagate's fault here, but regardless, we're down $4 here. Western Digital. Joel, what are you doing with your position?
I'm just going to kind of stick with that 80 stop, that 80 metal stop. And because it's, they came out and said their earnings are going to be good. So it could get there in a heartbeat. I'll need to check to see when they report. But I'm still not trying to hit it, accent on strength here and pick a top on it, though. Man, 95 sure gave you a level. I don't know. I mean, maybe you have your what's the situation we were talking about? Hasbro and Mattel. I mean, where two stocks in the same sector go different ways. I just don't know how long this Western Digital can hold up.
Yeah, well, it's what's happened here. You've seen, separation there. These were pair traded together for a long time, WDC and STX, and they went opposite directions in 2017. Really, before that, both were doing pretty good. If you looked, Western Digital, like you said, back in July of 2016 was $25. It was trading up near 40 at the beginning of 2017. So, you're talking about a 70% gain. Western Digital, July was 50, trading up near 80 at the 2017. So you're talking about a 60% gain. But Western Digital's continued to be up here. Western Digital is now up another, 10 points with today's fall in 2017, where Seagate, alternatively, is now down over 9 points. So that's where the separation has happened here. It really happened here in April when Seagate, really went down hard. And now we're getting another whoosh down again. People jumping in this thing for the 6.5% dividend are scratching their heads as they now see the yield at 7.46%, 32.86 right now. This incredible fall for Seagate.
All right, S&Ps, we didn't even talk about that. I mean, despite the Google earnings and kind of a quiet session yesterday, we caught support right under the close. Close was 68.50, and now we are within a point and a half of the all-time high. All-time high is 75.25. We've hit 74.75, so SPOOs are good despite Google being in the red and Seagate debacle.
Yeah, there's always, something picking up the slack. And if you want to go to what is picking up the slack here this morning, you got the cat. The cat's up $5 here, getting heavy bid. It's already traded 255,000 shares. I was going to say there's probably some size in the book at 110. There's probably some size in the book. I did see some size in the book at 112.50 as well. That doesn't matter. Not when you're trading already 255,000 shares at 809. This thing could very well trade 1 million shares before it opens. That'll chew through any size. I do see the 50,000 shares at 110. I think it was another 25,000 at 130 or 112.5. So that's absolutely nothing when you've traded this kind of volume. It's chewing through all the size. Caterpillar is going to be opening at all-time highs.
You will stand corrected here. The all-time high was made.
When was that?
February.
Oh, you're right.
Yep.
Back in 2012.
Yeah.
Sorry, I will stand corrected.
February 2012, you had a 116.95.
Maybe we get there today.
No, we're not. Lunch?
I'll back off.
Do you want to get one of the lunches back, Yomi?
No, it's going to put up like $9. I'm not doing that.
Okay.
No bets. But, man, it's strong.
Yeah, it is strong. If you want to just keep an eye on one level right now at this time, 14.85. That is your pre-market high. We backed off $1.25 off there. So 14.80, 15. We'll see if there's any size. 116.95, that's your all-time high.
Okay, and General Motors here, I was going to say it was a source of strength. It's now a source of weakness. It has turned for the worse. I was saying this on the pre-market show, Spencer. I was actually long going into the report. The stock popped. I sold the pop, and then I was looking at it, and it popped all the way to like 36.70. And this was on the numbers. Give us the numbers, Spencer, first. We haven't brought Spencer in. It's an earnings show. Spencer, Give us the numbers on General Motors. I'm going to give you the breakdown of what I saw this morning.
$1.89 versus $1.69 was the estimate. Sales of 37 versus 40 billion dollars. The CFO on the call says they'll cut their Q3 and Q4 North American production by about 150,000 vehicles in total compared to the first half.
Okay, so that's maybe why we've turned around for the worse here this morning, as the call obviously happened after the headline numbers here. So we got the pop. I actually sold in the pop. Pretty happy that I did it. I just had it overnight for an overnight trade. Had a feeling GM might be the number and get the pop, and then I didn't want to hang around for the drop, so I'm glad I sold. I sold at 36.40 and 36.36, I think, this morning. So pretty happy that I did, because now it's 35.29. I'll tell you what I was reading though in the tape. And this is, before the other, conference call numbers happened. But it got the big pop, and, the stock's just not really in favor. It hasn't been. You can say in the last month or two it's come back quite a bit, but it's not in favor. So they're always kind of leaning, that if they come out with good numbers, which I thought they were gonna, that they might do the pop and drop. But I was looking at the tape, and just this is the pre-market trading tape, and you could see offers start. It got up to 36.70 right away. And then you could see offers start forming. It starts to leak. And there's not much on the bid. And that's, I got out, as it was coming down there. But, then it goes all the way down to, and it's looking at 36. And I'm like, this thing wants to go red. This wants to go red. And I was getting ready to short it, actually. And in the pre-market, just using my tape reading, because I could tell, with the offers coming in and, the bids not being no bids at all, that the thing wanted to go red. But then somebody came in with 15,000 a bid at 36.10. And that changes everything. It's a game changer when you get that kind of size bid in the pre-market. And you can say, what's 15,000 shares? It's nothing on GM. But in the pre-market, when it's all 100, 500 share bids and 500 share offers, all of a sudden somebody's bidding 15,000. Now everybody says, whoa, we got a big fish here. There's an institutional player here making a stand, and they're gonna, they're saying that the stock's gonna stop going down here. And then you see immediately some people bid 36.11. Somebody else comes in and lists 36.20. It goes back up 36.30, 36.40. It goes all the way back up in that area, and then almost 36.50 again, and actually up all the way over to 36.60 again. You can see it on the pre-market chart that Joel's going to be showing you here right now. But then, what happens is slowly starts to leak again. So you had somebody make a stand, conference call came out, and then eventually, obviously, they hit, they came back down and threw it. But one player, my point to that story was that one institutional player with 15,000 shares changed everything. It wanted to go red before the conference call, and it didn't, because that one institutional player with 15,000 shares stopped it. They came in, whether they really wanted to buy the stock or whether they were just trying to make a stand, I don't know. You can't tell what the intentions are. But when somebody comes in with big size like that, it really is a game changer. And it's almost like there's a lot of that happens right on an earnings report, because nobody wants to make a call. Nobody wants to say, hey, the stock's going up, say the stock's going down. You have little players coming in sometimes, but no big players. And if there's an institution sitting there, and you've talked about this before too, Joel, there's an institution that's long like $1 billion or say 500 million worth of GM, and they're like looking at the same thing saying it's going red. For 10,000 shares, if you had, bid $36, so you're talking about $360,000, position. Well, you have 500 million. What's 360 grand? It's nothing. You could actually stop the stock from going down and maybe make it turn around, and it did for a little bit until the conference call hit it. But it's amazing, what happens with such little money after an earnings report. Just a couple $100,000 made a big difference on GM this morning, at least for a while, until those comments from the conference call hit it.
That's a big order. That's a big order.
It is.
In a regular session, you don't even see that. Good question here out of this, Bob. It was like, now you saw that on the book. You saw the
on the book,
right? But
untraded.
What printed? Did anything ever? Did they?
I never looked back to see, because they got sidetracked when we started the radio show when it came back on. But none of it printed. Those 36.10 went bid 15,000. And then right away, there's people pennying it, 36.11, 36.15. If you're an institutional player, they're going to come and penny you too. They're going to be, okay, my bid's going to make more bids come in, because they're sitting there and saying, the little fish are saying, I can lean on the big fish for protection. Sometimes the big fish throws it out there just because they don't want stock going down anymore. Not saying that's what happened in this case. We have no way to know what he really wanted. Maybe he really wanted to buy 15,000 shares, or maybe he just wanted to stop it going down. And it stopped it right in its tracks, because I tell you, it wanted to go red, and that order changed everything, that 15,000 shares. So when you get one big player coming in, it makes a big difference. But that order was on the book. It hadn't actually traded there yet. So Bob's saying, then it printed up near 36.74. So maybe that player really wanted to come up, and maybe that really player, wanted it, and he paid up for it. Who knows? But all my point is that one order one order of $300,000, or maybe in this case it was 500,000 because it was 15,000 shares times 35. One order makes an enormous difference when you're just getting breaking news on an earnings report. And sometimes those orders can change the whole tape. They change the whole tape, change the whole game.
And I just want to make one quick point. I want to ask you too, Dennis. When you sold that GM position, were you cognizant at all of the recent highs that we had? We ran up to 38. Okay, because that's one point that I just want to make. The high of the move was 36.63, buffeted by 3 or 4 highs right at the 36.50 level. Now you got a little bit overdone, but just based on the the trading action from the last 3 or 4 days, if you were keying on that, along with looking at the order flow, I just wanted to see how much of an influence that had on your trading decision.
Yeah, I look at it. And I didn't sell it right away and throw my order out there saying it's going to stop there. But when it got to that point, it got up and just trade a couple hundred shares above 36.63. That's telling me, okay, well, it's starting to get tired. And it's getting tired near those old highs, which means maybe there's another institution again that could be there. And then some sellers coming in, maybe they're looking at those old highs and it starts to change it. There's not a lot of information. All we have is the earnings report. So the technical information, all you have is those few highs. We haven't been up here for a while. I'm thinking naturally 37. I go to my big hole numbers. Maybe, it could get up to that high, but it couldn't. It stopped in its tracks really around 36. It traded a couple hundred shares up to 36.74, whatever the high was. But for the most part, it was really starting to stall between 36.40 and 36.60. That's where some size started to come down. Start seeing offers form in the book, even little offers, and they start moving down, and then bids start getting whacked as telling you it wants to turn. That's just classic tape reading. And I use a lot of tape reading in my trading. I used to only tape read. That's all I used to do was literally, I didn't look at charts. All I used to look was just the montage, which is your level 2 quotes, and your tape going by, your consolidated tape. And reading all that, and that was enough information for me full time when I used to trade GE and Lucent Technologies back in 2000, 2001. That's all I used. Those 2 tools. That was it. And S&P futures you have on the screen, because S&P futures start rolling over your stock, General Electric, 90% correlation. It's going to start rolling over there too. But there's so much information gathered from the tape. That art's been a little bit lost with high frequency trading because there's so much noise in the tape. But there's no noise in pre-market trading. These are real trades. The high-frequency traders aren't coming in here and making markets. Everybody thinks, it's a high-frequency traders pushing the stocks around on the earnings report. That is utter nonsense. The high-frequency traders have a profit margin of less than a penny. They can't come in here losing $1 on GM. They're not even trading in the pre-market. These are all retail investors for the most part and the odd institutional player. And when the institutional size comes in at the open, that's why we say, a lot of times things really turn at 9:30. Because in the pre-market, most of your institutions are still hands off. These guys aren't even at their desk yet, at 8 o'clock in the morning or 7:30 in the morning. So the real players aren't there yet. And so you have retail players who are playing, from home, moving the price around, but there hasn't been a lot of volume yet. That's why a lot of times you see complete turns at 9:30, changes in direction, because real money comes in. You got somebody going to sell $500 million worth of stock's going down. There's no retail trader that's selling $500 million worth of stock in the pre-market, unless they're a really big fish. So that's the difference. That's why stocks start to turn at 9:30, because the real money comes in.
All right, and just real quick, we on the sell-off on General Motors. You got the 35.19. Now, basis the daily chart, you can see we kind of been in a little bit of a vacuum area here. I like that 35.19 down to 34.87. That was another low you had, so targeting the $35 area. Getting a little bit of a bounce, but, the range for the day could already be in GM here. If you consider 36.75 on the upside, a little bit closer to the low, but see if people stand up at 35.
One more continuation of my rant, just reading Jimmy A. Jimmy A says, Dennis, the tape reading is okay after hours and pre-market, I'm assuming he means. But during market hours, it seems impossible anymore. It's so true, Jimmy A. 100% true. And he says market hours, 60 to 70% of the volume is high frequency. And I would say 80 to 90% of the quotes are high frequency. So here's your big difference. Exactly. That's why I love trading the pre-market. I like trading after hours. I don't have to deal with the high frequency noise. The difference is the high frequency traders only come in when there's the big fish. They're coming in, they're trying to get ahead of the big fish. They can't, they're sure a little retail, maybe they can get ahead of the odd retail trader if he's big enough. They're really trading inside the big fish. Like I said, the big fish, most of them, 90% of them are coming in until 9:30. So that's why in the pre-market, high-frequency traders really aren't trading that much. You'll have the odd, machine trading. You got the penny jumper. You've got the same, little high-frequency programs that will trade sometimes, but they're not trading the earnings events. 9:30 comes in, the big institutions come in with the size. Now they've got size to lean on. Now they can, have their protection because their profit margins are so slow, and now they can jump in and, push, and make a lot of noise happen on the tape. So that's why I love trading in the pre-market. Your art of tape reading still works very well during earnings events. People say, how do you trade the earnings events? Well, I traded using tape reading skills for years, from 99, 2000, 2001, 2002. So I can read the tape very well during an earnings digestion period. But, middle of the day, impossible. It's all just noise, chop, and garbage.
100 shares flashing everywhere.
Yeah, 100 shares. How do you read that? So tape reading skills come very much into play in the pre-market after hours. During the regular session, not so much. Completely agree, Jimmy A.
S&P futures have hit a new all-time high in pre-market trading, 24.7575. Former high, 75 and a quarter. So we've already on the books with another high. Made two highs up in that area, 75 and a quarter, I believe 75 and a half. So SPU's opening up at all-time highs.
All right, a lot of other earnings reports here. Spencer, we're going to give you the lead here. Where do you want to go? Because we've had about 10 to 15 major S&P components report this morning.
Well, we said we would start with Google, and then we didn't start with Google.
We mentioned Google, but we never really got into the report. Give us the numbers for Google.
All right, I'm going to give you a lot of numbers here. So Q2 EPS on Google, $8.90 versus $8.25. So they beat the EPS number there. But here are some other numbers that maybe you want to know. So, of course, they got fined $2.7 billion by the EU. That nearly halved their net income to $3.5 billion. But they still beat the estimate. So as far as Google's segment revenues go, total properties generated $18.4 billion. That was up 20% year over year. Other bets, which is like Google takes over Mars, or other secret stuff we don't know about, is $248 million, up 34% year over year. Aggregate paid clicks, so these are every single click on an advertisement on Google or any of Google's ad networks, up 52% year over year. And 12% quarter over quarter. Total cost per click, which is how much it costs people to generate a paid click, was down 23% year over year. So that's how much people are paying to advertise on Google, down 23% year over year. I thought that was really interesting because if you follow the digital advertising space, you know that Google and Facebook combined make up like 90% of all digital ad spending, but according to this most recent number, people are spending less money per click on Google than they were last quarter. That was down 23% year over year and 6% on the quarter. So if you're looking for a reason why they hit the stock, that could be why. But we talked about this on the pre-market show. Sometimes there just is no reason, I don't know why they're hitting the stock.
I think you're right though, Spencer. I think in this case they probably are hitting. It's traded enough volume that once you get the volume flying up, it starts to be more from fundamental reasons because there's enough players, there's enough information in that price now to actually justify it. So I agree with you here. It's when on the initial spike or the initial down, sometimes they have these whipsaws there because there's not a lot of information in that price yet. The price is still digesting the information from the earnings report. We've had a lot of hours now to digest this. This came out right after the bell. We had 4 hours of after-hours trading. We had 4.5 hours of pre-market trading here now. It's found its home here, and a lot of and there's a lot of players. I was saying before, institutional players only trade during the day. It's not true. On a Google report, there'll be some institutional players staying after the bell a little bit and moving the position around. So it's right after the bell. It's either 6 o'clock, 7 o'clock in the morning earnings. The institutional players aren't there yet, but on that Google report, that's got a lot of information already into that price, and obviously they're pricing it down, probably because of the stuff that you just talked about.
We did make a new all-time high on the initial headline. Went up to 1020.05. I'm using Google here at the preference of Wave Trader. That took out your former all-time high that was made at 100,861. So what
I was there for like a second.
Yeah, I was there for a second. What I imagine was something like this, and what happened is that you probably had some scales out there that people are like, okay, whatever happens on the report, I'd like to sell some stock. Now, I don't know how much you can show in, before an earnings report in Google, before people start leaning at you. But in my opinion, people maybe had, what was the former all-time high? 08, I'm going to call it 0861.
This is on the L, the GOOG L.
The GOOG L, 500 at 109, 500 at 1,010.
500
1,000 at 11. I'm not going to say the 1,000. 2,000 at 12, 3,000. I mean, if they really went out of the position, then you keep doing the whole numbers. Boom, all the buyers keep taking them out, and then you found a big old seller at 10/20/05, and all those buyers that were taking out those scaled offers, boom, they got hit. Pre-market low 964, kind of settling in at the 970 area. Probably won't be able to get any wager off Dennis on this one. I don't know, 970. I do see a couple lows at 964, 960. I mean, it's hard to call out levels on this one.
Joel, can you just analyze that tape? How long was it up there for? Because this is just a teaching tool here too right now. We're doing a little bit of education here on to call it technical Tuesday. I don't know what we're calling. But how long was it up there for? So do you have the actual trades?
This is a minute.
Grab?
Well, Dennis, I just went to a minute chart. Okay. So boom, in 1 minute, it went up to 120.05. It stayed there for that next bar. And then by the next minute, it was down at 100.07. So all this right here, these first two bars in a minute. You can't think that fast.
Probably the majority of that is somebody running a news algo, somebody running off the headline numbers, because there's no human being reading and digesting the whole damn report in a minute. So it's machines basically reading headlines. And the headline numbers were good, right, Spencer? The headline numbers beat, right?
Yeah, the EPS beat, despite the fact that they got fined nearly $3 billion. They still beat.
Yeah. So the EPS numbers were good, and there's some machine that says, it's just a simple algorithm. EPS and the top line numbers beat, buy it. And they're dead wrong, and they're dead money there, because obviously, there's other information there that, is going to come out. And, on the conference call, even more came out, which hit it harder. But, that's, the one thing, the danger of just trading on headline numbers is that you got your big institutional money managers that are actually going to read the report. They're actually going to try to understand a little bit, because they're investing on this company on a fundamental basis. And, sometimes that takes a few minutes. And that's why you have this head fake out, because the initial numbers beat. And almost every time when you see the initial bottom and top line numbers beat, the thing gets this spike right in 0 seconds. That's a news algo, just buying the spike. But, when you dig down, sometimes the devil's in the details, and you dig into that report a little bit, it's not so good. That's why you get the big pop and then the subsequent drop.
All right, just one final thing on Google here too, and we'll go more into the options when we bring Nic Chahine on here at 8:35. But it went off the board at 998 or whatever. I mean, I don't even want to think about what 1,010 calls or 1,015 calls. Let's say 1,015 calls. You paid $3 for. Well, if you could, basically that gives you a right to short the stock, right? If you can sell it above 1,015, you're locking in profits, and that's another thing. Anybody that had options, from $1,000 over, I mean, they're just booking profits there, and that could be another thing that happened. But we'll see. I got a feeling Nick's going to be looking to buy this thing sometime today. That's what I'm thinking. But we'll see when he comes on at just about 6 minutes from now. 5 minutes from now.
5 minutes.
So let's see if we could do 5 more earnings reports in the next 5 minutes.
Well, we're going to get stalled here because imbalances are coming out in 3 seconds. So I just want to give you that information first. And then we'll see what we can do in the last 4 minutes here. Just looking here. Man, these are so consistent. GE, 83,000 a sell. Sell and balance every day. Alibaba, 15,000 a buy. It's small buy and balance every day. Twitter, 33,000 a sell. Just trying to look and see what else I see. Square, which is trading up a little bit. It's got 12,000 a buy. It's nothing. Bristol Myers, no, nothing there. Lilly's got a 15,000 share buy and balance. It's reported earnings. We're going to get to those numbers in a second. It's actually trading down. They're all pretty small, Joel. Maybe too small to talk about. Let's go back to the earnings parade.
Okay. How about Eli Lilly?
Let's do it. Eli Lilly trading down $1.50. A tie on earnings, and before Spencer gets in the numbers, drug stocks seem to more, and Lilly, maybe not so much, but the smaller drug companies, when they report earnings, it's not as important sometimes as the actual, drugs, that when they get information on their new drugs. But anyways, that being said, Eli Lilly is trading down the pre-market on this report.
Yep, Q2 EPS $1.11 versus $1.05, so it beat by 6 cents for that. Sales $5.82 billion versus $5.60 billion, so a good beat there on the top and the bottom there for the Q2. They're also raising their fiscal year guidance. They see EPS in the range of $4.10 to $4.20. That's 5 cents higher than what it was before, and sales are coming in at 22 to 22.5 billion dollars. That's also an increase of about $500 million.
Getting ahead a little bit here, Joel. Give us a quick. Okay, we're gonna do them fast. So give us like one number.
All right. Well, we're trading on the low, just off the lows of the pre-market session. I'll go right now. I'll go with $83. That's your key level for the day. You had a low right at 83.16 on July 13th.
Biogen, BIIB, trading up 13 points in the pre-market. Spencer, numbers, and then me and Joel both give you a number.
Same story. Q2 EPS $5.04. That beat the estimate, which was $4.41. Sales of $3.08 versus $2.81 billion. So beat on the earnings, and again raising their fiscal year guidance. EPS is being raised, sales being raised.
Stock trading up $12, up 4.3%. 300. That's the big number.
Same
there
number.
For me.
Same number.
Still long it in my investment portfolio. I've had this thing for a lot of years. I'm in from $60. I'm sticking with it.
Just to give more credence to that 301.39 high, we also talked about the 300 psychological number. January, the yearly high in this issue, 301.42. So we got a real good number to look at. Stock Hunter must have been listening to the pre-market show.
I think so.
Are you tapping into our lines here? Can we check some IP addresses here? Because Dennis was like, why the heck are the banks trading up so much today on a percent? And you know what? Don't ask me, because they came out with the Fed, the jobs number. It was strong. Rates are going up 2 or 3 times a year. Yellen has that testimony a couple of weeks. She's like, rates aren't going up, and they hit the banks. So I don't know. Someone anticipating maybe another change in tone by Janet Yellen?
There was some comments from Citigroup, and I'm trying to think if that's maybe where it's coming from here. But there was some comments from Citigroup this morning at Citigroup Investor Day or something like that. I don't follow all these conferences and details, but there was some positive comments, I believe, from Citigroup this morning. I don't know, Spencer, if you want to dig and try to hunt those down. But Citigroup is the one that's up the most. It's up 2.1% here this morning. I'll say Citigroup, if you're trading it from a technical basis here, $68. Big number on it for this stock. It's probably some size up there too. All the other ones are up too. You got multiple catalysts, really. The European banks are very strong. Deutsche Bank's up 2.5% in the pre-market. Barclays up 2%. Banco Santander trading up in the pre-market as well, about 1.5%. Credit Suisse is trading up about 0.5%. You got the European banks are strong, but there was some positive comments from Citigroup. You do have
I got your comments right here.
Fed decision tomorrow. What's the comments from Citi?
They said in their presentation that they're targeting a return on assets of 90 to 110 basis points, and they want to increase their annual investment spending by about $1.5 billion by 2020.
Yeah, so I think that was the driver. Now every other bank's kind of been following Citi, because I've been watching the pre-market tape, and it's been Citi kind of leading the way. And Goldman's trading up, $1.50 in the pre-market. Yeah, Morgan's trading up 0.9%, but Citigroup's been your leader. It's up over 2% here today, and the bids just continue to pile in on Citi. It's already traded 242,000 shares. So I think that's your main catalyst.
Right, up a percentage point is J.P. Morgan. And another note here, I mean, these banks I know had some pretty good numbers, and they got hit here. So it's, letting the dust settle after the earnings report, coming back in. Real interesting number, though, to take a look at. I think J.P. Morgan is probably the best of, these banks to trade. Unless you're a big size trader, you could trade Bank America. But let's take a 94.50, and then you had the breakdown. People were hoping for 90. Call it a 4-point move. You're getting $2 of it back right now in the 92 handle. So 92.5, that looks like a good level here for continued upside in J.P. Morgan.
It's 8:35. We didn't get our 5 in 5 minutes, and we got about 2 in there. So let's go get Nick, and we'll just keep flying through the earnings.
All right, we're bringing Nick on the hop. Nic Chahine,
Nick on the fly.
author of
Good
Grade.
morning.
Good morning, Nick. How's it going?
Going great. How about you guys?
We're doing
We
good
are
here.
busy in earnings land.
Yeah.
Earnings central here, Nick. We're trying to pump them all out, and we got a lot more to talk about here, too. I do want to dig back just into the Google report here because we know you watch these big ones, and we want to get Nic Chahine's technical thoughts here just on the Google trading action.
Okay. Well, Google, as far as before I trade anything, I'd like to look at it from the fundamental perspective first. Because without it, I really can't sell any downside puts in it to profit from it on the long side. Technically, it had an incredible run, so a little drawdown is not that terrible for me. And when I saw it pop to 1020 or whatever, or 10 aftermarket, whatever the high was, I was like, there's somebody, I hadn't seen the headline yet, so it was kind of like somebody had the number maybe a little bit earlier, or maybe they saw it, I don't know what. But anyway, a drop in Google doesn't scare me from the overall trend of the stock. So if I wanted to go long it, I'll do whatever I always do in something that I believe in the long, which is sell longer dated puts way lower than current price. So a good day to do that is on a day where the stock is falling, and a perfect day is when it's falling on its own and because of a particular headline. So I didn't see anything that alarming in the report. I didn't pour into every word of it, but the fears that were baked into the stock before are still there, yet the stock was running higher. So to see a little drop after a big run, it stays in the trend itself, I'm not that worried. So when it opens down, I'll start sniping some entry points for it for myself, and then I'll nibble. Maybe on the first day, it's not a great idea, especially when markets are at all-time highs. So there's that added fear of what if the market corrects, Google will also correct, so I have to make room for that. So the way I would do it is see if it's still within my trend. Depends on the timeline I'm looking at, daily, weekly. Usually the weeklies are one with better conviction because allow me to see a clearer view without seeing the little daily gyrations. So it depends on how it handles the open and the move thereafter.
So you'll start to build a position. You won't necessarily go all in, but you don't want to miss that some of the opportunity after the open, and you'll monitor it after. I didn't even look premiums. Did you do anything, any lottos, anything going into the report, or just hands off?
I slapped myself silly to not do anything, but had I done anything, it would have been perfect. I was going to do a put calendar, and I posted it with friends and family. I said I'm hitting myself in the knuckles, so I don't do the trade I want to do, but it would have paid. I was going to sell this week's puts and buy next week's puts, which would be ideal because then this week's will expire worthless, and then I would be short Google for almost free. And I didn't do it, but that would have been the choice. The open interest data did not provide any clues. It always never does for Google, which is pretty weird because of the volume is in it. Maybe it's because there's two tickers, GOOG and GOOGL, I'm sure, but it's never really a good gauge for me, so I don't use it from that perspective. But the hunch was I was going to do a put trade, but I didn't do it.
A put spread. You were going to buy a put spread. You weren't going to sell.
Yeah, a calendar put spread, which means I would sell this week's puts at a level. I think I chose 55 on the GOOG L 955, and I would have bought next week's 955s. So if it stays above 955 this week, the one I sold would expire worthless. So I gave myself a discount to buy next week's.
Okay.
So I would end up holding puts for next week at a discounted price.
All right.
And therein lies the profit.
How about Mickey D's here? Sold off into the report. I didn't even see what the report is, but they must have been selling a lot of burgers and fries there. 156.75. That's your all-time high. You have it up, traded at 435 here. Let's see if this is probably the highs of the pre-market session. Let's bring it up.
Can we get the numbers from Spencer?
Sure.
Let's get the numbers,
Spencer,
and then that'll help Nick and all of our analysis.
McDonald's $1.70 versus $1.62 for the Q2 EPS. Sales of 6.05 versus $5.96 billion. Comps are up 6.6%.
Well, you can't argue with numbers, right? But a stock that looks like this on a weekly, I'm posting stuff and I'm not seeing them pop up. Oh, yes, I am. Okay, never mind. So you can't argue with the numbers, but for me, it's one of those things. I missed it. I'm not on board of this, even though I saw a rally coming, but that was months ago and I never got on board. So it's one of those things I say, okay, I missed it, but kudos, they're delivering. Apparently, they're playing technology way. I don't particularly go to McDonald's, but they're delivering the sales. I can't argue with that. I don't short it. It's kind of like an Nvidia where you don't short it even though it's so high, and it is liable to fall at some point. But it's too high to chase for me and too hot to short.
This is an interesting chart with your all-time high at 56.70, hitting 56.60 in the pre-market. Street kind of headed the wrong way. I've taken some profits here, pushing it down to under 152 yesterday. So I think, poof, you're right back at all-time high here. I think you might see some sellers in the open off Mickey D's. GM, I know you've talked a little bit about Ford in the past. So stocks seem to have good reports and really can't muster a rally here. What's going on in GM? Your analysis on General Motors.
Well, GM had a measured move up, and it exceeded that move. And I said to a couple of friends of mine that if I were to play it, I would short it. And that was a few days ago, and it would have been perfect. And I went long it when it dipped, and I got out of my longs, and I never entered short. But that would have been the trade I would have done 3 days ago, and I was on record of saying that.
Explain measured move, Nick. Sorry to interrupt you. Could you explain to me?
Okay.
Go ahead, please.
Sure. When you see an upside potential. So when I posted a chart and on the chart, there are a couple of green lines on there. So when I see prices set higher lows, so it's an ascending trend and they're bumping against, say, the 3460 level, which kind of looks like a roof. So it goes up to it, it hits it, comes back a little bit, back far down further than the past dip, and then it comes back and hits the same roof. And so the lows get higher and they bump along the same roof area. I don't draw it as a hard line in the sand. It's more of an area. And then they bust through that area. They overshoot higher. It's kind of like they're saying, oof, I'm tired fighting this. Let the bulls have their way for a little bit. And usually the move is measured based on how far they came. So in this case, I expected them to hit 35.50, exceeded that potential by a lot, because somebody else could have argued the same exact trade setup at 35.60, which would have gotten it to 36.50. So I saw them move coming off of the 34.60 potential, and I said, okay, it could hit that potential, so I don't short it. And I was waiting for a dip and never came. A few days ago, I said, okay, maybe now I can short it tentatively, but I never did it, but I wrote it up. And I was prepared to do it, but got busy, my schedule. So from here, if it's a lot more, I don't know where it's at this morning, but if it, I could repeat what I did before on big dips. I could sell puts in it, generate income.
Nick, we've got Rob Hood in the chat, wants to know your thoughts on XRX. I do have a small position on an XRX right now, full disclosure, so I'll limit my comments, but give us your thoughts here, Nick.
I don't follow it fundamentally. The trend is up from, say, 12 months ago. I'm looking at it here. It had specific moves on headlines that I don't know anything about, it looks like, because I see giant moves. So it's coming into an earnings report. What is it at this morning, just before I put my...
No, it's just... when does it report, actually? Does it report today? I don't have XRX on my list.
It should be early August, according to my chart.
Okay, so it's coming up in a little while. No,
Right.
There's no news, I don't believe, on it today.
Okay, so it is in an ascended move. It had that same setup, kind of a cup and handle-ish that we just discussed, higher lows bumping against the roof at 29.50. So once they broke that, and it looks like yesterday's candle was the one to break it. Unfortunately, if you weren't on board, boom, it filled up the upside potential all in one candle. And this area where it closed at 30.56 or 30.60 thereabouts has had a couple of pokes before about in February. So I would see how it handles that before I decide whether I get out of my longs. To start a long here for me is not an ideal place for me to start a long. But if I'm in it, I don't have a reason to close it. until I see what they do with the next scandal or two.
Okay, Johan Smith in the chat here wants to know about CMG. I mean, we talk about the stock every day. Full disclosure, I have a day trading position on in this one right now, so I'm going to limit my comments here too. I've got positions on and everything, but
okay. So CMG is a terrible technical story with an even worse and sad fundamental issue that they're dealing with. First of all, I don't like the company itself just because of the way. It's almost the same reason I don't like Apple itself. It's just a sentiment for me. But they hung their hat years ago on the fact that they're food with a conscious, whatever the logo was, that they're upscale food, they're better than anybody else, and they delivered the comps based on that sales pitch. And then when that sales pitch goes away with people getting sick off of your food and you can't tell why, then you lose your comp. And when you lose your comp, why are you still over 100 PE? This is insanity. The valuation, this stock could have tremendous more downside, even though the technical, there was a head and shoulder formation that I posted ahead of the debacle, and I said it could hit 390, 380, but look at this looming head and shoulder that sits there. And technically, it would be a lot lower. 360, I said, could come pretty quick, and it did, and then some. And yesterday, we see more headlines. I saw some headline about a second person confirmed from that same store or a different store. So, and the video, the rats falling off of the rafters. It's not a knife I would catch people because of the fact that it's still 100 PE.
All right,
100 PE.
If I could jump in for a second, and this is sort of a continuation of our conversation yesterday. But Dennis, there was actually a woman in the office yesterday. She was sitting with Brent, and he was explaining to her, I guess, the news desk. I don't know if she was an intern or what, but I asked her, hey, do you know about this Chipotle thing? Do you know what happened last week with the rats and the people getting sick? And she said, no, I don't know. And so I told her, and this is the same thing I said yesterday, Dennis. And I said, oh, well, do you care? And she's like, well, I don't really eat at Chipotle, but I asked you if you ate there. I asked her if you ate there, would you care? And no, not really. So she didn't even know.
She doesn't care if there's rats in her store?
She didn't know. She didn't know, and B, she didn't care.
I bet if you ask you ask 100 people on the street if they cared that there was rats in the restaurant. I bet you 9 out of 10 or 9 out of 100 would care.
Well, having rats in the restaurant is one thing, and having rats fall off a roof onto the floor, that's a completely different level.
I think people care, but we're gonna find out. So I've been saying is I think this quarter could be fine. The report tonight, I think this quarter doesn't have any of that information in it, but I think next quarter is gonna be a disaster. I've said it already, and I'm gonna go on the record saying that I think they're gonna lower guidance here. Now, if they don't lower it tonight, they're going to lower it in the next month or two before the next quarter, I think.
People say Wall Street prices future, right? Fears, earnings, potential, whatever in the future. If they don't address that now, and they have buried their heads in the sand before, if they do that this time, I think they're going to be punished hard. People are looking to say, for them to say, this is what happened and this is what we're doing to fix it. They didn't do it last time, and the stock got shellacked. If they don't do it this time, they're going to get punished again. So here's the thing, okay? If you look up Chipotle and you look PE 103-ish, probably trailing, and then you look at all the alternatives, okay? When I said that the other day, you're oranges. I said, guess what? I'd rather eat oranges with that rat boot than the apples at CMG. So taco, I'm reading tickers, 21. All the other ones are like 15, 28, 22 PEs. 60 is HABT, whatever that is, habit. Panera, 47. Eat is 11. So why am I paying?
PE is too high, I agree.
PE, and then net margin is 0.59. So they're doing all they can in order to get the comp sales back, which got their stock up there, but they're failing. So this is it's not a fundamental story I sell puts below anymore.
And just one other thing too, and Dennis and Nick can attest to this. Let's say you're taking a stab here at 340, right, on the long side. there is so much overhead supply in this thing that people, that tried to catch a knife at 390, 380, 370, 360, 350. I mean, you got a lot of competition. And then, if you go longer term, there's still some people that, oh, wow, I bought this at 250. Man, I left a lot on the table here, October 2012. They're still selling at a profit. So, I mean, that's just the thing that's keeping me, besides the fundamentals and the things you're talking about, just the overhead supply in this thing is just, I don't know. I mean, you kind of feel like it's never going to get back over 400.
So I'm going to throw in a 5-year chart of CMG, and in it, if you can read the mess through it, sorry, because I usually look at it on a shorter term, there was a kind of a inverse cup and handle or a giant head and shoulders that was from back in March of 2016, and I drew a couple of green arrows, and the lowest one pointed at 326 or 328. It's almost here. So it was a broken trend from then, and it never recovered. And this was, we talk about a measured move, as I zoomed out right now, and this would have been a measured move from something I posted. I said it needed to hold or risk the low 400s. That was way back then. And then the arrows point to this level. So technically, you can say this has been seen from before. It's just the headline just made it happen a little quicker. So I don't believe in it because fundamentally it's still bloated. And they have to prove they earned this bloat, and they haven't yet. So we'll see what they say.
Hey, Nick, go ahead, Dennis. Go ahead.
I was just going to say, just as long as we're still talking CMG, is, Wave Trader's saying too much bearishness going into the earnings report. He feels like I feel the same thing. I feel like it could have an earnings pop here. And 2 reasons. One, because a lot of people are being bearish. The second reason, none of this will be in this earnings report. So that's why I think you could get a pop on the earnings report. I think if you do, I think it's a pop to sell. I've went on the record, I think every day this week saying that I think if you get the big earnings pop, I think it's a pop to sell because I think the disaster is coming next quarter.
I think this for the same reason it will fall. The fact that none of this will be in there, the fact that they won't talk about it will be the reason for people to sell it. That's my opinion.
Just one quick note here. I'm just going over the last few quarters. They had made 0.67 and then 126. Now estimates stand at 245, so nearly double last quarter's estimate. So high expectations there. Nick, we've kept you a little bit long, but I just want to ask you just about the general market here. Broad market, S&P's just made a new all-time high in pre-market trading here, 75, that's your current high. So you are opening to a little resistance here just based on the daily charts. There were 2 highs up there. Do you have any resistance on your charts?
I see a poke at 76.25 from the 20th.
Oh, okay.
I don't know.
My bad. Yeah, you're right. My bad. 76.25. All right,
so if they can't touch that, I'd ask why not. I've said they're hesitant to step into the highs. I think this morning's move was combined oil pop, a combined bank pop, a drop in the dollar. So there's a lot going on, folks, and if the Fed's coming this week, also there was a headline about some political news here. So everything is in the wind of the sales of the bulls, and yet they're not struggling. We're at all-time highs, but they can get so much further if they wanted to. They're just not taking it. Maybe it's the downdraft from Google or what. So earnings, super important. I don't short this market. If you're asking me, I'm not shorting the pop. I closed my shorts, the big ones from the NASDAQ and the SPX. They were out to December and October and September. I could reopen them via credit call spreads, which gives me about 5 to 10% upside leeway from here. But I'm not shorting the line right here. It's just too dangerous. They have so much potential they can live through, whether they do it or not. I don't know. I do know the dips will be bought without a new black swan or a game-changing headline. So the range is still stuck, which is amazing. But we are at all-time highs. Caterpillar would influence up because it's the Dow, for example, it's market weighted, and we know CNBC concentrates on that as the market, quote unquote.
Nic Chahine, options expert and the author of Create Income with Option Spreads, throwing in some fundamental and technical analysis in here. Nick, great chatting with you always, and looking forward to talking to you again next Tuesday.
Next week, I will be on vacation. So
you just took a vacation, Nick.
It was a traveling vacation. This past one. This one is my usual vacation. I got to hit the beach and just chill.
Oh, so there's a difference between a trip and a vacation, right? So the other
one I went back to Beirut, which I hadn't gone to in 26 years. So that was a special destination.
All right. Well, I'm sure you will get internet service on the beach. So we'll be speaking to you next Tuesday at 8:35 a.m. Now, Nick, we'll let you go. No pay for next week, though, okay?
You get a pass this time.
All right. Nic Chahine, Dennis the Cat, falling off here a little bit, hit 114.80. Me and you were kind of skeptical about a hit 116.95 today. I think John Donson, he took a nice position into this one, and he might be holding on for that. And the only reason I said that is just because the average daily range on this thing, I mean, it's probably 2, 3, 4 points. You get a 5, 6 point pop. So, you know, if you're an institution and you've been long this thing for a long time, pretty good opportunity to sell some stock here. Clinging to the 113 level right now.
Just still talking CMG, and I'm going to say what I said on the show a couple days ago. John Dott's saying, how do they not lower guidance tonight? I'm going to say it's probably not enough information yet. And what I mean by that is it's only been a week. So they don't know, you know, even if the sales are looking bad this week because of all the negative headlines, they don't know that's going to happen for the next, 80 days. So I don't think there's enough information for them to lower guidance unless the sales were already bad prior to these events. And I don't think they were. That's why I don't think you have a guidance lower tonight. I think you have an okay. Personally, I think this is just my opinion. I think CMG is going to have an okay earnings report. I think they're going to buy the stock. I think it's going to pop. That's why I keep saying on the show. I still think it's a pop to sell though, because I think next quarter, I think somewhere in the next 90 days there is going to be a guidance lower, in my opinion. And maybe I'm going to be wrong. We're going to find out in the next 90 days. I do not think it's going to be tonight. I don't think it's even going to be in the next 30 days. But I think sometime between the next 30 days, between a month from now and the next quarter, there's going to be a guidance lower. And I think it's going to be because of these events, and I think they're going to slam the stock on it. So that's, the question. If they lower tonight, I'd be surprised because it just hasn't been long enough yet for them to say, hey, we got trouble here. And we don't know if there's really trouble there. I mean, we don't have anybody sitting in these stores saying people aren't going to them. I'm just speculating that, from my opinion, I think people care.
And also, I mean, they probably won't incorporate into this report. They're probably going to have to take some more, safety measures. I mean, at least get some rat traps or something. I mean, they're gonna...
It wasn't even the rats. It was a norovirus. The rats was a separate story. I mean, really, that was bad headline. But, 130 people got sick at the store again. What's going on, Chipotle? Get it together. Yeah. Forgive me once, but, you come back a year and a half later, you're making people sick again? I think that's a recipe for disaster long term. That's why I'm not investing in the stock at $330, and it's multiple still too high too, in my opinion. I think it's coming in. I think in 90 days you see this under $300. It's my opinion. Not tonight. The report's going to be okay, but I think in 90 days from now, after they report their next earnings, not this earnings, next earnings, I think it's under $300. That's my opinion.
There's so many earnings we didn't get to. Let's just
fly.
Where do you want to go?
I don't know.
10 earnings in 1 minute.
All right, 3M. All right, 3M. Q2 GAAP EPS $2.58. Adjusted EPS $2.25 versus $2.54. Sales 7.8 for $7.86 billion. They also narrowed their guidance, their fiscal year guidance. They narrowed and raised it.
Stock down $4 in the pre-market, so they're hitting it. I mean, classic scenario of stocks has run up too much too. I mean, this thing's just been overdone. It's a, it's a staple. It's not even like it's a growth stock. It was $140 back in 2016, beginning of it. It's $210 now. It's running too far. $205.
Pre-market low 0232. That coincides with your May 31st low of 0227. 202 is my level on the downside.
Could we get some imbalances real quick, actually, Dennis?
They haven't grown much here. Okay. Twitter, 65,000 to sell. The banks are starting to get some buying balances. Bank of America, 102,000 to buy. Source of strength today, just summing up the day, is you're going to see oil strong. USO is trading very high. We haven't mentioned oil once, but oil is up USO is 1.5%. So oil stocks are strong. Banks are strong too. We're seeing a lot of strength in the banks here. Others, obviously, you got a lot of sectors up with the S&P futures trading higher too. But if you're looking at potential weakness, TLT is down. Bonds are getting hit hard here now, which is really going to weigh on anything that's dividend sensitive. So watch out for your dividend stocks.
Alrighty, we didn't get to JetBlue, Domino's, KMB, HCA, UTX, but all that information is available in Benzinga Pro. So if you want a free trial of that, you can go to benzingapro.com. That's it for us. We're going to wrap it up for the day. If you want to listen to our show again, you can do so on youtube.com/BenzingaTV or catch our podcast on iTunes, SoundCloud, and Stitcher by searching for Benzinga or PreMarket Prep on any of those platforms. Don't forget about the upcoming Benzinga FinTech Summit in September in San Francisco. To learn more, go to bzsummit.com. You can also email me, or you can email events@benzinga.com if you want to find out about how you can attend. So that's our show for the day. Looking ahead to our show for tomorrow, a couple of guests on the docket for Wednesday's show. We have, actually I think just one, Maj Sweden. He is a microcap expert. He's going to be on the show tomorrow at 8:15. So we got a microcap guest. We're going to talk your favorite microcap stocks, and so that's on the docket for tomorrow. Hope you enjoyed our show today. We had a lot to get through, and we got sidetracked, I think, with Chipotle, but that's okay. We'll cover more tomorrow. Another big earnings day today after the bell. Juniper, AT&T, AMD, Express Scripts, all reporting. UHS as well. A lot of stocks to get through. So we'll get through as many as we can tomorrow. But have a good rest of your day, folks. Good luck out there, and we will talk to you on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.